Hey everyone, Fatty from Pack-a-Punch Traders here. Gonna make a quick video, kind of reviewing the week. Not too bad of a week for me so far. Not bad of a month. Took like a month off or so. Came back last week and been very picky. Not really trading every single day, and so far paying off pretty well. Here are the three trades of the week: SIDU, and both of the other ones are TBLT, which was a hot play of the week. Might continue. We'll see what happens. And let's just go through some of the plays of the week, see what's going on with them, any lessons to take away, what's working, what's not working. SIDU here, I took it on the 19th here, and I was getting it in the 350s, right? 3.5, yes. So that was just looking at the chart, most likely open price play, VWAP reclaim, failure to break down. Do we have a breakout level? Let's see. That it could test in the 380s. Okay, so I'm looking for this day. The 380s is what it tested. I'm remembering this play now. Okay. Yeah, so this was well off the highs. It was doing really good volume. As we can see, the float isn't that high. It's doing insane volume that day, similar to what it was doing when it went parabolic. So pretty much the way I saw it was a first green day, very good volume, rotating the float, failing to break down, holding key levels, threatening to test for 380s where there is some resistance, and that is what happened. It was a choppy play. What's up with this? A couple decent spikes out of it, but really it was just a pretty choppy play. Even with how much volume it was doing, but still it was able to prove to me that it had enough power in it to push higher, to squeeze shorts. Even though it was a little annoying here, still set up nicely. The volume kept coming in. As we can see here early on, there was some selling coming through, and it completely failed to break down. Shorts got squeezed. And then kept going for another couple days, and let's see what it could do. It might be a breakout, but really, and if it's a breakout, what we'll be looking for is the volume. As we can see here, and we talk about constantly, demand is what drives these plays. Volume is really what you're looking for. You're looking for the demand behind the play, even though it might have a low float, and that might be very enticing. If there is no volume, it's not going to do much. It being a low float helps. It means that I might need less volume and demand to really push it. But still, nonetheless, as long as demand is coming in, you can expect, I think it's a safe bet, rather say that, higher prices. If that volume is going to be buying, as we can see here, and you could look at the chart, think of the psychology. You got this huge spiker, fails to break down. You got a bunch of shorts trapped, as we can see in the history here. Besides this one spike, it all just gets shit on. So shorts came out, stuffed it at 380 around the breakout level here, pre-market, and couldn't head much lower. Demand kept coming in, and it pushed it higher. Shorts got squeezed. And similar with TBLT, except this one was a lot cleaner. Here we are, sub 1 million float, low market cap. Look at the demand. That's what's really driving this thing here. It's just failing to break down at times, a little choppy, but it's just consolidating, figuring out which direction it wants to go. And this is why I took this one overnight. So I had a solid play on this one here, and then the next day I was looking at it for a previous high day break to continue the breakout. And usually that's not something I do, but considering it's a low float and the volume really was there, I was willing to take the risk. And it came back, held open price, held VWAP, and decided to hold it overnight. As we can see here, it really was not that great of a sell here in the sevens, and then just kept going. But look at that volume. It's really all the demand driving it. It fails to break down. Shorts get squeezed. More buyers get attracted to it. That's more demand driving it higher. and it just helps that it's a low float. There are obviously larger floats. I don't think this is one. 92. Yeah, 92 million. And look what it does. It can move. Look at the history, though. No volume, no volume, no volume, not doing anything. Once demand is there, that's what drives this. So it is important to focus on the float. The float, when we talk about it being a low float, we really like to focus on those. It's really because it increases the odds in your favor that it should spike, that it could spike quickly and just be a volatile play. The thing with the higher floats is that it will need the demand, and it's just easier for something that's a low float to move. But here we are, a great example of something that isn't a low float taking off. We got a solid bump in volume compared to usual, and that triggers this thing here. And once again, the volume is really the key to this thing. It starts increasing in price, but volume isn't increasing. It doesn't match. There should be a match in the price or the price bar and volume bars. If there's an increase in price, there should be an increase in volume in buying. That should support it. There's some buyers behind it. Or else there really isn't many buyers attracted to it, holding the stock, showing that there is demand, and you might get something like this. So be cautious of plays that are spiking with low volume. Here on the first few days, very nice. After that, very suspect. Would be playing this very cautiously over the 6.5 break. But yeah, and then there's probably another few examples. XELA, recent spiker here this week. Very low price, but you could just look at the chart. What's different right here compared to everything else? The volume. And sure, here you could say, yes, there's a little bit of a spike. There was some volume here as well, and that's what triggered it. Usually, it's just garbage. And here we are shifting momentum. So it's really important to get the demand on your side and the trend. And ideally holding key areas that could possibly be an area where more buyers come in, as well as an area where shorts, if that area confirms, shorts will get scared and start covering their position. So, in ways to measure that, I don't look at Ortex or whatever it's called that gives you intraday stats on short interest and whatnot. I really just judge it based off the volume that I'm looking at key areas. So, like, for example, what we talked about, SIDU. Actually, I like TBLT a little bit better. So, what are we talking about? Key levels, failing to break down, trend. So, as long as the demand kept coming in, once you get this area here around the fours, right? Yeah, so in the morning here, I played this one too, so another trade review. So here we have a stuff right around a breakout, if I remember correctly. We got the 330s area, 4-ish, 390s. Okay, so yeah, this thing's pretty much getting stuffed at resistance here, and you got some selling going on. So in my mind, I'm seeing people betting against this, and I'm combining the thinking with the overall chart, how it's usually garbage. People are consistently betting against into each pop, and that is giving them a solid return. So why not do it again, right? And then you have a solid candle here, red candle, a solid area of conviction for shorts. So people were most likely feeling safe around the high fours until it got breached. And that's what led to this massive squeeze. This is shorts getting covered, or shorts covering, getting squeezed, and buyers joining the party, recognizing the breakout as well, not wanting to miss out, having FOMO or whatever it is, just recognizing the pattern, getting in, leading to more buyers. But really here, you got a solid double top. And as long as the trend keeps holding up, Buyers keep coming in, increasing volume, keeps making higher lows, holds VWAP, open price, breakout levels, all these bullish indicators, you line them up, and in this case, it proves correct that there was shorts trapped in here, and it took off. And sometimes it's not just the intraday shorts. You got swing shorts as well that might have held on for a few days in this area when they thought it was most likely going to fail, but then they were wrong. It confirms the 320s, 330s. That leads to a solid perk to the 4s, and that leads to another solid perk to the 6s area here. There's another breakout, and in turn that leads to 10. So who knows if this could keep going. At some point, this is not going to be sustainable. The volume is just going to get overexhausted and extended, and it will just have a lot of baggers, people getting bagged in it, and it will reverse. Shorts will end up making their money. They just were not making it down there, mistimed it, and they were really the fuel to this play as well. So, kind of a lengthy video here. Hope this was useful. Let me see anything else before I miss out. Once again, 152 million. Look at the demand. That's what leads to the solid price. So, I guess that's 12 minutes of me talking about the importance of demand. Hope this was helpful. It is a little late, getting a little tired. I'll make other videos like this where I'm probably more awake and articulate on this topic. But really, that's all it is. We're looking for the failure breakdown, shorts getting trapped. It does help if there is a low supply, but really focus on the demand. Demand is what is driving everything. Without the demand, without the volume, we really have nothing to go off of. So, yeah, we'll just wrap it up there. Hope it was a great weekend for everyone. I already got the video, the top plays, and my watch list out there. So, we'll be back tomorrow with another video lesson. Rest up. Let's just refresh and get ready for tomorrow. Can't wait for the market. Another week. Let's take whatever lessons we got and apply them. Have a good one.